Have you ever wondered which investment could have turned a modest amount of money into a fortune over the past decade? Today, we're diving deep into a fund that didn't just perform well, it absolutely dominated the market. Yes, I'm talking about the Nasdaq-100 Index Fund, a fund that has left the S&P 500 in the dust this decade. Stick with me till the end, because what you learn today could change how you think about investing forever.
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
So first things first, what exactly is the Nasdaq-100 Index? Don't worry, we'll keep it simple. The Nasdaq-100 is a stock market index made up of the 100 biggest non-financial companies listed on the Nasdaq Stock Exchange. That means you're looking at tech giants, innovators, and industry leaders all bundled into one. Companies like Apple, Microsoft, Amazon, Nvidia, and Tesla. These are companies that aren't just household names, they're the companies shaping the future. Now you might be thinking, okay, big companies, but why should I care about this index? Here's the kicker. The Nasdaq-100 has had one of the most explosive growth periods in history over the past 10 years. If you had invested $10,000 in the Nasdaq-100 at the start of 2013, by the start of 2023, your investment would have grown to roughly $70,000. That's a 600% gain in 10 years. Meanwhile, the S&P 500, a broader index that covers 500 large companies across different industries, would have turned that same $10,000 into about $35,000. That's more than double the difference. Now let me ask you this. Why do you think the Nasdaq-100 outperformed so drastically? Drop your answer in the comments section. I'd love to see what you think. Is it just tech companies being flashy, or is there a deeper reason behind this trend? One of the biggest drivers behind the Nasdaq-100's performance is innovation. Think about how much our lives have changed over the last decade. Smartphones, cloud computing, electric cars, AI technologies, they're not just trends. They've fundamentally changed the way we live, work, and play. The companies in the Nasdaq-100 were at the forefront of these changes, and as these companies grew, so did their stock prices. It's simple math. Bigger growth, bigger returns. But here's something really interesting. Even though the Nasdaq-100 can deliver sky-high returns, it also comes with higher risk. Unlike the S&P 500, which is diversified across sectors like finance, energy, healthcare, and more, the Nasdaq-100 is heavily weighted toward tech. That means when tech goes up, the Nasdaq-100 rockets. But when tech goes down, it can fall faster than the S&P 500. So, does that mean investing in the Nasdaq-100 is risky? Not necessarily. Risk is real, yes, but over the long term, history has shown us that these tech-heavy portfolios can outperform the market significantly if held for years, not days or months. Think of it like planting a tree. You don't expect instant shade, but if you give it time, you enjoy the fruits. And here's a fun question for you. If you could go back 10 years, would you put all your money into the Nasdaq-100, knowing the returns it would have given? Or would you play it safe with the S&P 500? Drop your answers in the comments. Honestly, I'm really curious to see the different strategies people might have taken. Now, let's talk about the easiest way for regular investors to get exposure to the Nasdaq-100. Index funds. An index fund is like a basket of all the stocks in an index, so when you buy the fund, you're effectively buying all 100 companies at once. No picking winners or losers, you're just riding the growth of the entire index. Some of the most popular Nasdaq-100 index funds include Invesco QQQ Trust, commonly known as QQQ, and other ETFs that track this index. What's amazing about index funds like QQQ is that they're low cost and incredibly easy to manage. You don't need a fancy degree in finance. You don't need insider information. You just need patience and a long-term perspective. And if you're thinking, well, I missed the past decade, so it's too late, think again. Innovation doesn't stop, and the Nasdaq-100 keeps evolving. Today, AI, semiconductors, green energy, and next-gen computing are powering the next wave of growth. So there are still huge opportunities ahead. Here's another thought-provoking question. If you had $1,000 to invest today, would you put it in a Nasdaq-100 index fund, a traditional S&P 500 fund, or somewhere else entirely? Think carefully about your answer, and I want you to share it in the comment section. Let's get a real conversation going because honestly, learning from each other's strategies is one of the best ways to improve as an investor. And speaking of learning, let's dig into why the Nasdaq-100 has been such a powerhouse this decade. First, technology adoption has exploded. Everyone's streaming movies, using cloud storage, shopping online, and relying on smartphones and apps. These behaviors create massive revenue streams for the companies in the index. Second, globalization and access to new markets have allowed tech companies to scale faster than ever before. Companies like Amazon and Apple aren't just U.S. companies, they're global powerhouses. Third, the Nasdaq-100 has a strong bias toward companies that are innovating, not just operating. Innovation equals growth. Growth equals stock price appreciation. But there's one thing I want you to keep in mind. Past performance doesn't guarantee future results. The market can change, sectors can fall out of favor, and volatility is always around the corner. That said, the Nasdaq-100 has historically bounced back stronger after downturns, thanks to the resilience of its core companies. Now, here's something that's often overlooked: the psychological advantage of investing in index funds. Imagine you had picked individual stocks. You would have needed to track hundreds of things daily: earnings reports, market trends, news cycles, rumors. It's exhausting. But with a Nasdaq-100 index fund, you're essentially outsourcing that work. You're riding the wave of innovation and growth without constantly stressing about individual stock performance. Here's a question for you. What do you think is more important for long-term success? Picking the perfect stock or staying invested consistently over time? Leave your answer in the comments. I'm genuinely curious how you think about investing psychology. Now, I know some of you might be worried about market bubbles. After all, tech has had its share of ups and downs. But here's the thing. Investing isn't about timing the market perfectly, it's about time in the market. The Nasdaq-100 has proven that sticking with innovation-driven growth over the long term can yield incredible returns. And yes, it can be volatile, but volatility is part of the deal when you're chasing big gains. Before we go further, if you're enjoying this video and want more insights like this, make sure to hit that like button, subscribe, and share this video with your friends. It really helps the channel grow, and I've got more amazing content on investing and financial strategies coming your way. Another aspect worth mentioning is dividends. Many people think of tech companies as growth only with no income, but the Nasdaq-100 includes companies that have started paying dividends, giving investors a small but steady stream of income while still benefiting from long-term growth. And what about diversification? Some of you might be thinking, isn't putting all my money in Nasdaq-100 risky? Absolutely, but here's a trick. You can balance it with other investments. Some people use a split strategy, maybe 70% in Nasdaq-100 for growth, 30% in S&P 500 or bonds for stability. This way, you ride the tech wave but still protect yourself from extreme swings. I want to ask you another question here. If you could only invest in one sector for the next 10 years, which would it be and why? Tech? Healthcare? Renewable energy? Drop your answer in the comments. I read all of them, and I love seeing different perspectives. Let's not forget the power of compounding. If you stay invested in the Nasdaq-100 over multiple decades, the growth can be truly exponential. Reinvest your dividends, let your gains accumulate, and you can turn even a small amount of money into something remarkable. It's the secret behind building wealth quietly and steadily over time. One final thought. The Nasdaq-100 isn't just about numbers. It's about being part of the companies shaping the future. When you invest in this index, you're indirectly investing in the technologies and innovations that are changing the world. AI, electric vehicles, next-generation semiconductors, and cloud computing. There's something exciting about knowing your money is fueling progress. So here's a challenge for you. Think about your investment goals over the next decade. Could the Nasdaq-100 be a part of your plan? How would you balance growth, risk, and diversification? Take a moment, think about it, and write your thoughts in the comment section. I promise it's worth reflecting on. In conclusion, the Nasdaq-100 has crushed the S&P 500 over the past decade, thanks to innovation, global reach, and tech dominance. Investing in it through an index fund allows you to ride this wave of growth with less stress, lower costs, and the power of compounding working in your favor. Remember, past performance is not a guarantee of future results, but the potential for growth is still significant. If you enjoyed this deep dive and found it helpful, make sure to like, subscribe, and share this video for more amazing content. And don't forget to comment with your thoughts. I want to hear from you. How would you invest in the next decade? Would you ride the Nasdaq-100, stick with the S&P 500, or explore something completely different? Take these insights, think carefully, and plan your investments with both excitement and caution. The Nasdaq-100 is more than just a fund. It's a front-row seat to the future of technology and innovation. And it might just be one of the best long-term plays you can make if you're willing to hold for the long haul. Now, it's over to you. What's your strategy for investing in the next decade? Drop your reply in the comments. I can't wait to read them. And if you haven't yet, hit that like button, subscribe, and share this video so we can explore more investing strategies together. Your future self will thank you.